15 Minutes with Marlon, trending news and headlines.
Hey everybody, welcome back. This is the third episode of 15 Minutes with Marlon. So listen, we're going to talk today about the top headlines, the top news, the top questions that we're finding online. So Alex, take it away.
Multifamily market expected to recover in 2 years.
So this is great news for all of us in the multifamily space. We're hearing that multifamily, right, according to Globe Street, multifamily is expected to recover within 2 years. What does that really mean? Right now, it's very stable. Right now, at this point in time, we're still seeing substantial, solid, right, collections. So it's doing very well. Now, over the next year, there may be a little bit of a softening, right? Over the next couple of months, we may see that, some of the PPP funds may expire and a little bit of struggles. We don't expect it to be so challenging. However, the largest funds and the largest institutions are doubling down, guess what? In ground up multifamily development, because everyone seems to believe right now what's going to happen is we're going to get through this next little period of 1 to 2 years, and multifamily is going to come back stronger, better than before. I believe that wholeheartedly. That's what I do, ground up multifamily development, but I'm also seeing it from, having discussions with other institutional groups, other private equity funds, other brokers, different guys in the community, other developers. So I'm constantly there, and I'm seeing it in the news as well, that multifamily will come back even stronger than it has been before. I truly believe that. We're going to continue to monitor the data and see how that unfolds over the next couple of months. But I can tell you, no matter what, it's been time tested. It's been shown that multifamily is one of the absolute best places to have your investment dollars. So can't wait to see what the next couple of years brings on. Alex, what's the next one?
With demand for affordable housing, funding appetites are shrinking.
So what's really happening, right? Everybody's starting to condense and everyone is starting to shrink right now. But remember, all these things are very short-lived. We went through recessions where obviously the entire economic vehicle shrinks and constrains. Things slow, spending slows, lending slows, everything slows down. But we've lived this time and time again. We haven't lived a virus like this. This is unprecedented times. But if you think about this for a second, as a whole, as a community, as a country, as a group, wholeheartedly, we will get through these times. So when we have to hunker down, save, hold, maybe not do some of the things that we were doing before, then yes, right, things are going to shrink, things are going to constrict. But however, in the next couple of years, we will see asset classes rising again. We will see prices stabilize, right? We will see spending come back out again. So I truly believe those are some of the things that we're going to be seeing. It's going to take time, guys. We're going to get through some real difficult waters, but at the end, we will be stronger than we were before, right? And because listen, investors want to invest, lenders want to lend, buyers want to buy, sellers want to sell. That's never going to change. That's always going to remain the same. It may be different pricing, different asset allocations, but fundamentally, that's inherently who we are as a community. So I believe we're going to, get through this, over the next couple of years. All right, what do we got next?
Someone gives you $10,000 and tells you that you need to make $1 million in 2 years. What would you do?
So that's a question. So somebody gives me $10,000 and says, hey, I want to make $1 million in 2 years. Guys, look, let's be realistic. Unless you're going to fund some angel company, and even then, that may not even happen within 2 years. Anybody that's coming to you, right, and I'm speaking to everybody out there who believes they could take a little bit of money and turn it into a gazillion dollars. $10,000, you're not going to turn it into that kind of money, right? It's just not. If you're investing in the stock market, if you're investing in bonds and yields, that's never going to happen. If you're going to invest it in real estate, listen, that's a far stretch, right? I'm not saying that you can take the 10,000 if you work very hard, Maybe you can buy some property, very discounted, some single family homes, turn around, flip it, sell it, flip it, sell it, get, have a fortunate run. But when it comes to actually investing, right, putting those dollars to work, it is very, very nearly impossible, okay, nearly impossible, nothing's ever impossible, but nearly impossible to turn $10,000 into $1 million, right? It just doesn't work that way, not from the investing perspective. So the first thing I would tell somebody starting out, hey, I got 10 grand and I want to turn it into $1 million, I'd say, look, the first and foremost, most important thing that you need to do is educate yourself and learn exactly how this process goes, right? Don't just listen to gurus and people that tell you you're going to make millions of dollars. It doesn't work that way. Over time, absolutely. You may get, lucky on a specific deal. Sure, things happen. However, for the majority, those $10,000, can you turn it into 20 within 2 years? Sure. If you invest in a good, solid, ground up development, that's absolutely realistic. If you invested in a rehab and you turn around and you sell it for a good price, possibly as well. But for the majority, it's going to be very difficult. So I come to them with a sense of, hey, great, things are possible, but let's be realistic and let's walk through your financial outlook of what you really expect. That $1 million is a long shot, right? You really got to kind of bring it down and say, look, man, I think you could do 10,000 and generate some good returns, but let's look at exactly what it is, the type of vehicle that you're looking to get into, for the risk and for the reward. But simply put, it's a little bit unrealistic to think you're going to go from 10,000 to $1 million just by investing, right? Because you have to do something very, very active if you even want to remotely come close to that. So.
How do I start building a small real estate development company?
All right, so that's a pretty complex question, right? How do you start building a real estate development company or a real estate investment company? The first and foremost, number one thing you should do is learn about the industry. Understand what are the steps that are required to build a company, right? You can invest in real estate. Doesn't mean you're building a company. You can put a couple deals together, still doesn't mean you're building a company. If you're trying to build a company, remember, a company is a function of people, capital, deals, all resources. So you have to understand, how do you work with all the resources, and then how do you grow and expand on those resources. But even before we get way too far down the line in understanding how we're going to create this development company that you're looking to do, or this investing company that you're looking to create, the most important thing is understand the fundamentals. Understand, how to read a balance sheet. Understand, what are the tax implications to doing deals. Understand, how are you going to set up your corporate structure? Who's going to get you the financing? Where are you going to get your loans from? How are you going to bring in the equity? What type of returns are you going to give equity? How are you co-investing into your deals? Look at those things first before you start thinking you're going to grow and expand into a large development company or an investment company. Understand the fundamentals. That is very important. I mean, you can literally go out and grab a book that shows the fundamentals. You can connect with other people, right, that are living, breathing, and eating this stuff, that are willing to share information and kind of give some guidance, some insights along the way. And then you got to get into it, right? You can't just stay at a high level. You got to dive in. You got to get a property. You got to go through the cycle, right? Whether it was, a house, a duplex, 10 units, 50 units, 100 units, whatever the case may be, you have to get in and you have to know, right, what it is you're doing. Now, you don't have to have all the answers, right? Don't let yourself get stuck. You don't need all the answers, but what you do need is commitment and massive initiative, right? Real estate in any format, when you're actively managing your projects or actively managing your multifamily acquisitions, takes work, right? Everyone seems to think you're gonna make money in real estate and go to sleep and the money's just gonna pour in. That does not work, right? That is pure guru speak. And all these people are trying to sell you courses and they're trying to sell you, how to make a quick dollar. You may get lucky on something, but if you're really trying to build something that's going to stand, a long time, and it's going to really create a lot of value, then you have to be sure you first and foremost understand the fundamentals. Those are key, right? Again, remember, how are you going to value these properties, right? That's number one, right? Where are you going to find them? Are you building your relationships with other brokers and agents in the community that are going to give you deal flow? Because it makes no difference if you do one deal and then you stop, right? If you're trying to build a company. If you're trying to get one deal, make some money, and take off to Hawaii and be done with it, that's fine. Absolutely you can do that. But if you're trying to build a company, you have to systematically take the approach of how do we build the pipeline? How do we bring in deals, right? How do we communicate with our investors and have a great investor relationship with them? How do we, work with future lenders? What are some of the requirements that they have, right? How do you build up your own personal financial statement so that you can borrow from other lenders, right? You may have zero money. And if you have zero money, it may be a little bit difficult to borrow from other lenders. Then you may have to go and associate yourself with a capital partner, a development partner, a financial partner that are going to help you grow, right? Slowly and over time, right? Make mistakes on the first small deals. Don't jump in headfirst into substantially large deals, right? Because there will be mistakes. And the financial mistakes you make early on, if they're smaller, you can weather those storms. If they're colossal in nature, they can wipe you out. So a lot of things to think about. Very complex question that takes a lot of time, energy, and thought. You have to look around. What are the resources that you have specifically wherever you are to build your company, right? To be able to have it grow and scale over time.
How do I value multifamily real estate?
So valuations are very tricky. There's multiple ways to value real estate. One, you could value it based on the cost to replace the actual structure that's there. That's called replacement value. You could value it on the competitive market set of what you have around you. That's called your comps, right? Your competitive set of other properties that are very similar in nature. You can value it based on the financial income that the property is bringing, right? What is that income coming into the property, less all the expenses going out? That's going to give you a net result. That net result is your net operating income. That amount you're going to be able to use to determine value based on where rates are. What type of rates are those? Lending rates. So if the rates are, think about this for a second, if the rates are very, very low, right, your value is going to go up, up, up. If the rates start increasing, your value is going to go down, right? So you got to understand those two things too. So what you would do right from the beginning is you can just go online, find out what are the properties that have closed within your area. And it doesn't matter if it's land, if it's industrial, if it's warehouse, office, multifamily, any of those, it really doesn't matter. You're going to take pretty much the same approach. You're going to look at what those cost, and after you've understood, what other projects have sold for, traded for in the market, right? Then you're going to go out and try to understand what do these things get built for? Because if you're buying, if you're buying a property and you're seeing that you're buying it substantially more than what it gets built for, then there's a little bit of a problem there, right, in valuation. So you have to understand those first before you move on to the next step. And then you got to look at the financials of the property that you're going to buy. Is it income producing? Is it generating any income? Or is it not? Is it completely vacant, right? Then you go even deeper and you look at the type of income stream. What are the credit tenants that are in that property, right? Is it a barber shop or is it a Walgreens? Big difference in credit tenants, right? So you got to look at those things. So a lot of different factors that you got to take into consideration when you're evaluating any multifamily or any asset class for that matter. Hope that answers that question. If you guys want to connect a little bit more, we can certainly do so. We'd love to connect with you guys. Take care, be well, and we'll see you soon.
15 minutes with Marlon, trending news and headlines.